Index's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Korean markets too are trading with gains, but not substantial ones after the US announced a deal with South Korea.
India was the highest or just about the highest tariff nation in the world.
We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get.
Low that we saw day before yesterday, 24,598 is in focus. Will we break it right at the word go?
From being placed in the front category in terms of favor, we have now moved towards the back category.
Including the mobiles and electronic stocks as well, all of them likely to face an impact.
170 points lower on the Nifty, 24,676 is where the index is.
If 25% sticks, then we will be at $18 billion. So there is a $10 billion extra impact.
Let's see whether or not the bulls have something in store, but I wouldn't really rule out a fight back.
What we need to speak about, that recovery that we're seeing in the markets.
We always are grooming people. And she was ready, and I was ready.
Tariff schedule starting from the 1st of April is not out.
Triple our revenue and quadruple almost some of our profitability numbers amongst the two of us.
And India is unlikely to jump the gun before knowing any details in a dynamic situation.
Well, that was the day so far, and we're coming to you live from, the CNBC-TV18 Motilal Oswal studio. You're watching Closing Bell. What a recovery it's been for a market. Who would have thought in the morning, gap down opening 150 points lower. The Nifty straight away went below that 24,700 mark, reeling under pressure of that 25% tariff imposition. But now it looks like it could, the overwhelming opinion seems to be that Trump is using it as a negotiating tactic. And finally, we're still not at the end game. The end is going to be a lot better. It's not going to be as bad as what it appears, and markets are reflecting that.
Well, that's right. Rima, President Trump showed us red. The markets showed it green. Yeah. And it appears that our markets were positioned for some kind of a shocker coming in from President Trump, because the rupee yesterday was the weakest.
4 months low.
Today it's shown some kind of stability. The rupee, you had the FI shots in the system were very, very high, and the Indian markets underperformed itself. So it appeared the Indian markets were positioned for some kind of shocker coming in from President Trump, and that's why we saw a bounce. The good news is the July CD is low, which was in that ballpark 24,600 odd. That's got defended. But the problem is at around 24,950, that's where the resistance comes in at. And in the next 60 minutes, it'll be interesting to see whether or not we can get past that. Even at the midday when I had done the FNO corner, I had mentioned this, that 24,925, 24,950, that's where the resistance zone is, going by the options data, which Manglam will tell us in just a bit, and going by today's high as well. The Nifty Bank, that needs to get past the 50-day MA. Very, very briefly, it went towards that mark, and it slipped a little bit from there on. So the Nifty Bank and the 50-day MA, it's going to be important, because then it gives us some more ammunition to try to move towards the 20-day MA. And the advanced decline ratio on a day that Trump delivers this sort of a shocker, well, you have almost pretty much even Stevens. We started the day with only 300 stocks that were advancing. Those two got very, very close to each other. And currently you have more than 1,000 stocks which are advancing. So I think that's an encouraging sign, Rima.
And look at the way the FMCG index has powered on. The FMCG index is up close to about 1.8%. It's not that the numbers were a great or a big beat. They were in line, stable set of numbers. But unlike IT or unlike banks, where there was a negative surprise, the FMCG numbers at least lacked any negative surprise, and markets are rewarding that. HUL is higher, Imami. Revenues are flat, but the stock is up close to about 5%. Expectations were muted. Gillette, that's another big mover. I think on the top line, they've delivered a 9.5% revenue growth. So FMCG is clearly the star in today's trading session. ITC numbers will be out on Friday. But we'll talk more about it. Let's quickly tell you what we have for you. It's an action-packed closing bell coming up in the final hour of trade. We'll take stock of the buzzer, Sagility, Greaves Cotton, Keynes Tech, all on the back of high volume. Two-wheeler major TVS Motors delivers a steady Q1, numbers in line with expectations. Revenues picked up on the back of strong volumes. We'll get to the fine print. The management of Dabur will be joining in to discuss the earnings and the way forward. We'll wait for those numbers to come in from Dabur. Sun Pharma also just reported their numbers. There is a huge one-time loss of 800 crore in the bottom line on account of drug discontinuation and impairment. We'll get to the details, and then we're awaiting numbers from Coal India and Aisha. So, action-packed 1 hour coming up. So how should you position yourself in the last hour of trade? Mitesh is now with us with a few closing strategies. Mitesh, are you surprised by this intraday pullback? And it's not falter. We've come, actually now it's faltering.
Now it's faltering. Yeah.
Now it's faltering. You know, when we started the show, we were at 24,900 and swiftly in minutes, we've given up 40 points. So now just about holding on to that green line. So from the lows, it's still a, 200 point plus recovery, but we've come off a bit.
Good afternoon. One, I think, I'm not surprised by the bounce back for two reasons. One, I was not looking at the possibility of a big downside. There's always a chance that the price starts breaking below 24, 550, 500 zones and then may decline. But the indicator setup was suggesting that most likely we'll be sideways and range between 24, 550 to broadly about 25, 250. I still hold that belief. I think most of the weekly indicators are turning flat, which means that it will not be a volatile market, but it will be a ranged kind of a market. To me, right now, it looks like a 700-point kind of a range. It could be narrower as yet, but for the timing, I think these are the two important support levels and resistance levels, which is 24,550 and 25,250. So in that sense, the index, the idea is that once your belief is that it will be a market which will consolidate, then you deploy range strategies, which is basically try to buy near the lower end of the range. So I would want to buy in case we get below or just around 24,600 and try to take profits as we get closer to about 25,200. So next couple of days, weeks could be spent within this range.
What about stocks, Mitesh?
I have one buy and one sell. Dabur is, along with other other consumer stocks, is making a fresh swing high. So Dabur is a buy. Keep a stop below levels of 522. Look for targets in the range of 545 to about 550. And Ambuja Cement, after a good rally, there's first signs of profit booking on the charts of Ambuja Cement. So a short-term sell call with a stop at 613 and a target of 615 and a target of around 580.
Got that. Surbhi is also joining in. Surbhi, you had a hectic last 1 hour.
Yeah.
But we've got an action-packed 1 hour ahead.
Absolutely. Tariff talk. And folks, you should definitely check out this week's editor's playbook on CNBC-TV18 Access. We discussed this whole issue of tariffs threadbare in terms of what it means for India, for the markets, for the economy. The absolute numbers are very large, Rima. We earn almost $90 billion in all our exports that go to the US. And that's not even services. That's what you look at.
Yeah.
Just goods exports. It's pretty significant. But as a percentage of GDP, it's not too bad. It's 2.2% of our GDP because we're a domestic story. And the market will hope that eventually this gets resolved and the eventual numbers are lower than 25%. So we'll see. But yes, it's an added sentiment negative. Weak earnings, FPI outflows, tariff uncertainty. So not what the market needed.
Correct. It's, it definitely be a bit of an overhang. But I'll tell you what, the market doesn't like uncertainty.
Yeah.
And this at least is out of the way. It's 25%. Now it can only be down from here, hopefully.
No, it'll get better from here, right?
It'll get better from here.
It's not, I'm sorry to burst the bubble, it's not 25% because the penalties that they are going to impose, because we're buying Russian oil, we don't know that penalty number.
Correct.
Now, whether he does it, doesn't do it, that part is still a
So 20 basis points, 30 basis points, or 40 basis points at most, right?
He said up to 100% penalty.
I'm saying going by that as well, the hit on the GDP will be 20 to 30 basis points at most, right? I mean, and the other couple of factors, the rupee is weaker, so at least, it helps us in terms of exporting it to other parts of the country other parts of the globe as well. But that said, earnings. We get back to focusing on the fundamentals of our market. And Sun Pharma just came out with its numbers. Ekta is joining us to give us a quick snapshot of those numbers. Ekta?
Well, yes, it seems as though it's a largely inline set of numbers, at least in terms of the revenue for Sun Pharma this time. It's come in with a growth of around 7% odd. What seems to stand out is the margin performance, which is better than estimates, so 31% versus estimates of around 27.8%, and a net profit growth, which is around 20% higher. But this time round, they have been, in fact, hit by a one-off outflow of around 800 odd crores. So that is the one key thing which was factored in on account of a settlement. So that was one of the key things which would probably weigh down. US sales at $473 million versus an estimate of around $476 million, so largely in line with estimates. So no real big surprise which is coming for Sun Pharma. We'll wait by for the specialty sales number. But revenue growth in single digits, margins better than expectations, and the profit is hit by a one-time outflow of around 800 crores.
Okay. All right, Ekta, got it. Thanks very much. Sun Pharma in focus. Let's quickly get in a word from Sudeep Bandyopadhyay, Group Chairman of IndiTrade Capital, joining in. Sudeep, we have lots of stocks in the market to discuss, but let's start with Sun since those numbers just came through. What's your call on the stock?
Well, I think one thing, Survey, is interesting is that the US sales numbers are pretty much in line with what was being estimated. And that's a good news. The one-time hit, I think we have to look beyond that. And, if we do look beyond that, I think, markets will recover and things will start looking up for Sun Pharma. I won't read too much into this correction, which has happened post the announcement of the results. Fundamentally, we do like Sun Pharma from a long-term perspective. You have to look beyond all these tariff-related tantrums. And if you do that, I think Sun Pharma is a good stock to buy.
Okay, that's a bit of an overhang still on Sun Pharma to wait and see how the tariff issue plays out. But let's now put the spotlight on the top movers at this hour at 2:30. Hormis joins in.
Well, you can see the earnings reactions, not just in Sun Pharma, but look at the broader market names that are reacting to results. And they are on the extreme end and on very, very high volumes. And look at Kaynes Technologies first up, 9.5% higher. It's slightly off the highs though, but it's the biggest single day gain since the stock has seen since November of 2024. There's a big move there. And now take a look at the volumes here. 35 lakh shares have been traded today compared to a 20-day average of just 2.5 lakh. So a big volume mover is Kaynes Technologies. The other one, of course, and before we move to the other one, look at Kaynes Technologies here. In the last year and a half, there's 17 months gone by, the stock has delivered positive returns in 15 of those. So big moves for Kaynes Technologies. Sagility is the other one, and that's one name the management has told us earlier that 100% of its business comes from the US. And here another result reaction, 10% higher on the stock, comfortably above its IPO price of 30 rupees, and 18.5 crore shares have been traded today compared to its 20-day average of just 2.5 crore shares. And in the last 10 sessions though, the stock has been a bit of an underperformer. This is only the third time that it has gained in the last 10 trading sessions. The third big earnings mover is Greaves Cotton. Now numbers came out yesterday and it's building onto those gains today. It's slightly off the highs, 8.5% higher though, and 5 crore shares have been traded already compared to a 20-day average of just 16.7 lakh shares. So 5 crore compared to just a few lakhs. And despite this move though, the stock is still down 15% this year, which is in 2025 the first negative return that it may see after 2020. Now on the flip side, Newgen Software is the other one. It snapped a 5-day losing streak today. It's significantly off the highs as well and still up around 6.5%. But take a look at the volumes here as well. Here too, the stock has moved on big volumes and 3 lakh shares have been traded compared to a 20-day average of 14,000 shares. So that shows the kind of volumes that you have seen on Nucleus Software today. And lastly, Steelcast. This name is a top loser on the small cap index, 12.5% lower on the stock. And of course, here too, the volumes have been very significant here. And if you take a look at the volume figure that will come up on your screen, and it's that kind of moves that you see on the volumes front on Steelcast. Almost 3 lakh shares have been traded compared to a 20-day average of just 21,000 shares. So enough and more earnings reactions, but Steelcast, one of the movers on the downside as well.
But you got there's plenty of buzzers on the upside, so lots of green.
You take a look at the positives.
Yeah, always look at the glass half full and not empty, absolutely. Speaking of the positives, I mean, one of the stocks that has rocketed on earnings, like Hormas just pointed out, is Kaynes Technologies. Stupendous market expansion, margin expansion. That's what the company has exhibited. In the first quarter alone, their EBITDA margins are up more than 300 basis points. We caught up with the management. Hear out what Mr. Jairam Sampath had to say about the performance and the expectations for the rest of the year.
Global cues and the global, let's say, geopolitical happenings don't impact so much in the short run. Of course, in long term, they do. On that brief comment, I would like to say that this year's guidance still is intact. We see very strong uptake. Order book is as expected growing, about 7,400 crores of orders end of June. And the good news is that we see a good, let's say, increase in profitability across the different sectors, not just one or two clients, but a broad brush. Our efforts during last 2-3 years have yielded some results, and now we are seeing an increase. And as we go towards other quarters, we probably have a better operating leverage too. So overall, we hold our guidance of totally consolidated level about 4,500 plus crores of revenues.
Holding their guidance, and they're as optimistic about their OSAT business as well, the semiconductor business. They're saying that revenues should start coming through towards the end of the year and definitely over the course of next year. 10% on Keynes. Sudeep, I remember in this entire universe, even Dixon delivered very good numbers when you can argue on valuations, etc. Amber was very good. Amber, the stock was up 4-5% after numbers. Now we've got Keynes. Do you like anything here? One of them, some of them, none of them?
Well, I do like all of them. The only challenge is the valuation. So, I still can't make up my mind whether to buy at this kind of valuations or not. But performance-wise, they all have done very well. I'll wait for, maybe another 15-20 days, because if you recollect, this 25% tariff, which US is proposing to impose from tomorrow, doesn't cover smartphone and laptop, exports into US, because they were exempted under a separate document, and that comes up for review, I think, in mid-August. I think all these companies have significant exposure in that particular segment. So I'll wait and watch for maybe another 15-20 days what happens on the tariff scenario before I make up my mind on buying one of these stocks or recommending a buy on these stocks. But performance-wise, very good. Opportunity-wise, great. Only the multiple is something which disturbs.
All right. Sudeep, I think Vedanta is a stock you like, right?
Yes.
I'm just looking at their numbers which have just come out, and for Vedanta, always we have Hindustan Zinc that's already part of, the numbers, consolidated numbers that come out. But the aluminium business is more than 100 crore beat out there. The Zinc International business as well that they've delivered is better than what Kotak was working with, and even the oil and gas business. So all those three verticals that you normally look out for, well, that's a little bit better. The problem is uncertainty on the global front. What's your view at around 427 rupees? Is it looking exciting enough to you?
Oh, absolutely, Nigel. I think I've been positive on Vedanta for last almost a year. I think, beyond everything else, there is a significant value unlocking opportunity, which will definitely reward the investors in the short to medium term. The demerger is happening. It's a matter of time whether they complete it in September or November. So that's where the value unlocking happening. Second, overall, we believe that globally the metal scenario is changing for the better for Vedanta, and they will benefit. Leave aside the daily fluctuations in global metal prices and all this tariff-related shenanigans. But metals as a basket, particularly Vedanta's basket, is definitely very promising as things stand today.
Sudeep, thank you very much for joining in. Numbers flowing in. It's Chola Investment, where it's slightly lower than street expectations. Net profit at 1,136, falling short of estimates by about 50-odd crore. Get into a break. Here is a reminder for all our viewers. Unlock a world of exclusivity, expertise, influence. Become a member of CNBC TV 18 Access, our premium members-only experience on CNBC-TV18.com. The membership, that includes access to CNBC TV 18's flagship events, interactions with a journalist, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits.
Welcome back. Well, keep an eye out on the bottom of your screen. The Supreme Court has observed that Bhushan Power and Steel review play. Prima facie, they say they are of the view that the Supreme Court Bhushan Power and Steel judgment, it requires reconsideration. Now, this would be in the direction of JSW Steel and it would be viewed positively. They go on to make this point that ground reality is that 25,000 people will be thrown on the road if Bhushan Power and Steel is liquidated. And the purpose of IBC is to make a company which is in doldrums functional. Currently, the hearing is still on, but this will be in the direction that that it's moving in favor of what JSW Steel would like. To give you a background, a couple of months ago, the call was for liquidation of Bhushan Power and Steel, which would mean, it would be very, very confusing. What would happen to the asset? Will it be put up for bidding again? But now this plea is being taken on board, and the commentary that's coming out appears it's favorable for JSW Steel. Ashmit will join in to give us further details on what exactly is transpiring on that front. Well, we'll keep an eye on that, and we'll keep getting you the latest on that front. Keep an eye on the ticker as well. We have Tushar Pradhan, Director at Hexagon Partners, who joins us on the show. Hi, Tushar. Good afternoon. Good to see you. Earlier this morning, we were making this point that this market is net short. The Indian markets have underperformed close to around 4% in the last 1 month or so, while the US markets and the Chinese markets were higher. And the money market, that's the rupee as it is, was seeing some kind of weakness. So Indian markets were sensing some kind of negative. And it appears today at least that the possibility, since the FI was so aggressively net short, that could have been a bit of a short covering bounce that's playing out. What's your view? Is it just for the time being that the markets are shrugging it off aside, and then maybe in fact the fear will come to fore? How do you read it?
I think one can take any view here because as we know, markets are a very dynamic animal, so nothing is for sure. But from where we stand and what we can look at is, I think there is a lot of noise at the current moment, whether it is due to announcements, whether it is due to expectations, whether it is due to uncertainty. Whichever way you look at it, I think that is causing a lot of noise. I think investors should really focus on how much will it really impact. Say, for example, we take the trade situation. Out of the listed universe, how many companies really get directly affected by it? And you have to remember that the increase in tariffs is not only for India, it is uniformly across all countries, which means that unless our industries actually actively compete with other countries, which will have a possible lower tariff, is only when a business situation can become pretty critical for an Indian exporter. But otherwise, really speaking, if everyone gets the same level of tariff, which is not actually happening, that's why the uncertainty is there. But just assuming that it's a simple...
Okay, Tushar, we seem to have lost your audio, so we'll try and reconnect. By the way, the markets have given up all their gains now. So we're nearly about 100 points off from the top. From the lows, it's still a recovery of more than 200 points, but the intraday high on the Nifty was a level of 24,956. So we're exactly 100 points off from the session highs. Remember, today is also the monthly expiry, so especially post 3 p.m., expect a fair amount of volatility. Stocks which have lost ground, one of them is Adani Enterprises, so that's down nearly 3.5%. It's breached the 200-day moving average. Shriram Finance has slipped into the red. Sun Pharma posts the numbers. Numbers were in line, but the bottom line has been hit by that impairment charge of 818 crore. Hindalco, Tata Steel are some of the stocks which have been hit. Mid-cap index too has slipped some more, now down nearly 450 points. But let's get a quick update on what's happening on the India-US tariff situation, even as US President Donald Trump announced a 25% tariff and penalties for procuring Russian arms. Sources within the government say that India is not jumping the gun on tariffs as yet. Abhimanyu joins in with what he's picked up. Abhimanyu?
On the US tariffs, sources have indicated that India is unlikely to jump the gun before getting any more clarity on the details of penalties and the associated duties which are going to be imposed by the United States from the 1st of August. It remains to be seen what kind of strategy would be formulated by the Indian government based on any further information which may come out of the United States with respect to the applicability of tariffs and also importantly on the applicability and the quantum of penalties which have been announced by the United States. For now, the 6th round of negotiations for the first tranche of a bilateral trade agreement between India and the United States are slated to be held on the 25th of August in New Delhi. And it's also likely that trade negotiations via the virtual mode are going to continue between both the sides. While more clarity is still awaited, the strategy with respect to enhancing India's overall exports to the United States and also to different parts of the world, the strategy would be formulated formulated in due course based on the dynamic set of developments which are still unfolding, and also importantly on the quantum of tariffs and penalties which are going to be announced by the American government.
Thank you very much for that. We managed to reconnect with Tushar. So Tushar, we spoke about the tariff and that situation, but on the earnings front, pretty much half of the earnings season is now behind us. What has been your key takeaway, and has it thrown up any opportunity in terms of portfolio management?
Yeah, I think that's a good connected question. What we can see is that some of the earnings have not come up to expectations. Some of them have been big misses. But we also have seen pretty significant increase in orders, especially the capital goods sector. So, for example, we see a significant pickup in those expected areas. I think it might just be a lag effect again. And I'm very, very confident that the second quarter, which is ending September, as well as into the third quarter, ending December, is where we'll see the actual momentum on a YOY basis come through. So while first quarter has been a little bit mixed, I think the second and the third quarter seem to be positioned very well. So that actually has opened up a significant amount of opportunity. We can see some of these stocks having corrected 20-30% across the board. And that, because of weak numbers, gives us a very significant opportunity to enter at this time now.
Okay. Tushar, hi. Good afternoon. So I think this is the kind of market where people are also looking for areas of possible safety. So till now, pharma was providing a decent safe haven. Pharma stocks have actually done well in the last couple of weeks in all this uncertainty. But now we still don't know what they're thinking on pharma. What do you feel about this space, whether it's intermediaries or generic companies? Or would you prefer playing, say, hospitals and healthcare?
Yeah, that's an interesting side question, because in India, actually, the pharma sector has been the largest market share in terms of market cap available to buy for investors. But if you look at the entire therapy end to end, then hospitals will start to play a significant part in the overall healthcare space. I mean, including diagnostics, including all of these, I would say, ancillary companies to the pharmaceutical sector as such. But having focused on pharma for long, we don't tend to think of that sector beyond just the companies which make formulations. I think there is enough opportunity across the space, especially even in hospitals and even in diagnostics.
Okay. Okay, all right, just hold on to that thought. We have a very, very important flashes that are at the bottom of your screen, and this will be viewed very, very positively for JSW Steel. The reason is that the Supreme Court is saying, the order is saying, they're allowing the review petition, filed by the lenders and JSW Steel. And they're saying that, prima facie, they are of the view that the impunged judgment does not correctly consider the legal position as laid down by previous Supreme Court judgments. They go on to say that this is a fit case where the judgment needs to be recalled, matter needs to be considered afresh. Remember, this is actually a relief, because the review is going to be considered and the commentary as well is in favor of JSW Steel. They are the ones that had taken over the asset 5 years or so ago. They are the ones who had put in a lot of money, and they are the ones that had turned it around as well. So we'll wait for Ashmit to join us out. But I think, this is definitely a relief to JSW Steel and that appeal that they have made, with regard to the comments that are coming in.
No, absolutely, not just JSW Steel, and like JSW's, I think lawyers are saying,
logical and rational that
for the entire IBC process, because this judgment or the earlier judgment had become so huge, because it was not just about JSW Steel and the amounts that they've put up to turn this asset around, but what happens if an IBC proceeding can simply be disrupted like that. So I think that's exactly what they're saying. That's what the lender submission is as well. So it's a win. I mean, for the time being, it's a relief and a small win for JSW Steel, for the lenders of Bhushan Steel and Power. And that's what the lenders are saying, that the plan had been approved by the NCLT and NCLAT. The company had been revived. So the court rejecting the resolution plan was only due to non-adherence of a timeline. So this needs to be reviewed. The Supreme Court has agreed that indeed the review petitions will be admitted. So huge relief for JSW Steel, for lenders, and for the overall, financial community, as well as people who are involved in IBC, as well as restructuring, that this has not been suddenly thrown out entirely. We'll get in Ashmit as soon as he can step out. He's been, of course, hearing all of these proceedings live as they're happening in court, and we'll get to him as soon as it's possible. But Tushar, many thanks for joining in. Good to have you on the show today. We'll let you go on that note. We are rounding up to 3 p.m. So last half an hour left and it's gotten very quiet. The index is just about 1 to 3 points lower. Maruti numbers are also on the screen. The 3,712 crores, that's substantially higher. I mean, that profit
last
number looks,
20% beat on the bottom line.
That's a huge bottom line beat. So we'll look at the EBITDA line. We'll look at what overall numbers for Maruti are saying. Let them come through. The revenue is also above estimates. This is looking actually substantially higher. And the stock is shooting up as we speak. So, yeah, some good news coming in, at least this afternoon. Let's do one thing. As we get the margin calculations going with Maruti, let's quickly hop across to Mangalam. This is the all-important monthly, F&O expiry that's playing out. And it's a little volatile right now as we get into the last half hour. Mangalam, over to you. What are you looking at?
Well, it's gotten relatively quieter as we move towards the last hour, and that's because a lot of the volatility is now out of the way. This morning we opened much lower, thereafter there was this big recovery that we saw. And more importantly, if you take away all the news pieces, just look at the levels. The Nifty's lows have moved higher. All of June we saw lows of 24,500, slightly below 24,473 thereabouts. But all of July, the lows have been maintained between 24,600 to today's low as well, 24,635. From there, we've moved. So this is a very important zone as we look into the August series going forward. Today, the good part is that, one, there was some short covering that took place in the morning. But more importantly, it's the domestic-facing sectors which are now doing a lot better. So if you look at the FMCG stocks led by HUL's numbers, or you look at the Nifty Bank as well, they have shown a lot more recovery given the volatility that we're seeing in the global environment right now. And Maruti's numbers, like you just spoke about, look better than expectations. So the focus moves back to domestic themes itself. Now, as we move towards the business end of the expiry, the street believes that the market would be in this range. What is this range? 24,900 on the Nifty. The call has seen a fair amount of writing. So the expiry is likely to be between 24,900 to 24,850 because the 24,850 put 2 is fairly active in today's trading session. Were we to stay above 24,900 for an extended period of time after 3 p.m., then maybe the 24,950 level comes up. But that is unlikely because, the way the market is right now, it tells you that the option writers are pinning themselves between this very narrow 50-point range. Remember, Nifty in July series is down almost 670 points, and that's after 5 series, or that's the first series loss in 5. After 4 series of nearly 3,000 points of gains, we've seen a loss in July, and this is the first July, series where we've seen a loss in the last many years as well. So what are the triggers for the August series as we start tomorrow? We have the global uncertainty that still is underway, global updates around tariffs, RBI policy outcome the week thereafter, remainder of the first quarter results, and finally the festive season kicks off as well. So what the commentary is around domestic sales around festive season would have all these domestic facing stocks in focus.
Okay, all right. Thanks very much for that, Mangalam. So far, it's okay. And from being absolutely flat at 3 o'clock, now we're about 60 points lower. So let's see how this plays out, but not too much of a decline coming through. On Maruti, by the way, this is a complete top-down beat. The revenue is above estimates. The EBITDA is 300 crores higher than what the estimates were. Maruti's EBITDA is now almost touching 4,000 crores. And the margin, it's, of course, down year-on-year. It's fallen quite a bit year-on-year. But again, it's above the 10.2% that we were expecting. They've done about 10.4%. So it's looking good. We'll have to wait to see if, they've done slightly better on realizations. And some things definitely work for them this time around. And that stock has shot up smartly. Big move on Maruti, almost 1% higher. I think we'll just try and get some more, reactions to play through. But yeah, this is good.
Yeah, but the 3 p.m. move is playing out for the Nifty because Maruti's moved to the high point of the day. It can do little with regard to the weight. The 3 p.m. move is the reason that the Nifty has suddenly seen a sharp slip, in the last few minutes. Just pull up the intraday chart on the Nifty. And I think the Nifty Bank as well. Quick 100-point decline is what we're seeing on that one. Let's get the intraday chart. L&T, that's a large name, and that I think that should come up for you on the screen. And maybe you get a couple of other names like an ICICI Bank almost in the red. Heavier weights slipping. Well, we'll slip into a short break. On the other side, Nimesh is joining in. He'll be telling us what he's picking up in D-Street Chatter with a couple of stocks as well. We'll also go to our technical expert who will tell us what to buy or sell.
Welcome back. Slipping some more now for the markets, but one stock bucking the trend is Maruti Suzuki on the back of good set of numbers. Sudarshan now joins in with the key highlights.
So it's a healthy set of earnings. If you look at the earnings, you might see the revenue growth is just 1 or 2%, but the expectations are very muted in this current environment. And it seems that what has helped the company to report a healthy set of earnings is the export segment. If you remember, for FY26, company is expecting a growth of almost 20% in the export segment. And the price realization has seen a significant improvement both year-on-year and on a sequential basis. Our expectation was that it might see an improvement of 1 to 2% both year-on-year and sequentially because of the recent price hike that company had taken. But if you look at the realization, it's up 13% sequential, 7% year-on-year and 8% on a sequential basis. So while domestic business has been under pressure because of the demand concern that company has been facing in the entry-level segment, it seems that export segment has seen a major boost, and that has helped the company to report a healthy set of earnings. Profit was up almost 2%. It has come at 3,712 crore. Revenue was up 8%. It has come at 38,414 crore. EBITDA too has increased by 11%, and margin has fallen year-on-year, but it's higher than our expectation of 10.2%. It has come at 10.4%, down almost 200 basis points year-on-year. So overall, healthy set of earnings in this current environment by Maruti.
Okay, all right. Sudarshan, just hang on. We're also getting Dabur's numbers on the screen. I think we'll just put them back up. First glance, even Dabur looked okay.
In line.
Yeah. Profit up 3%, 508. Remember, Dabur's already in their first quarter commentary. They already said that it's the beverage portfolio that's still, slightly subdued and soft. But other parts of their business have been doing okay. Our volume growth expectation is either negative 1%, so no growth. I mean, slight decline in volumes, or best case, just about 1% growth. So we'll see. Wait by for that. But as we're going through all these numbers, very quickly on, I think we have Ashwin Patil joining in since we're discussing Maruti. Do we have Ashwin? Yeah, Ashwin, hi. Very, very busy afternoon. So just very quick, broad thoughts, Maruti. It's been a little inspiring, at least in Q1. What is your read-through and what's your call on the stock?
Well, the revenues are, quite subdued looking, and if you look at the, numbers quite deeply, then you can see other income, which has grown almost double as compared to on a YOY basis. Also on QOQ basis, it is quite high. So, if you split that number, then the profit will be, in a lower range. That is, we can see a decline in the profitability. Also, you can see that the margins have declined on a, on a YOY basis at about 10.4%. So I think, there is nothing exciting about the numbers which I would see at this point in time because, already there is a lot of pressure from the domestic lower-end business. Also, though the exports are looking quite heartening, but the domestic, which is a big chunk of the overall, volume numbers, which are not really very, not very positive as such at this point in time. So I would say that the numbers are not really very great to look into it. There's a margin decline, there's a big element of other income. So, also the top line has not grown up to that extent. So, fine. I mean, the numbers are looking okay kind of to us from, on a prima basis.
Got that. Ashwin, thank you very much for joining in. Point taken. Margins are down 230 basis points year-on-year, and the profit growth is largely led by the jump in other income. The profit has gone up by 700 crore year-on-year, while the other income has gone up by 800 crore. So that explains the beat on the bottom line. But it's time now for a D Street segment. Nimesh is now joining in with his insights.
Hi, Rima. Hi, Rima. So normally we see that volatility because of the expiry day. So that's playing out in the last 30 minutes of trade. But given that, we had such a big negative news with the US tariff, still the way markets have reacted, it's kind of positive, and also because of the positioning, right? I mean, the FIs were extremely net short on the Nifty, and you're seeing a bit of short covering in today's market. So that's playing out as far as the expiry is concerned. Flows are not much to talk about because if it's an expiry day, so it won't have an impact much. I guess what this tariff means is will add further uncertainty, as well as, it alters the long-term narrative of India being a safe haven, because we don't know exactly what's the kind of penalty which is going to be levied over and above the 25% tariff. So that's something which will add to the uncertainty in the near term. I guess from a flow perspective or from a sector perspective, OMC is something to watch. You've seen a bit of a recovery from the intraday lows, but again, the LPG subsidy is a big trigger for the stocks to watch out as far as the OMCs are concerned. Technically, I think 24,600 is a big support on the downside, so that's to watch out for. And for the time being, 25,300 is acting as a big resistance as well. So Nifty has been in that range for a while now, but it needs to break out on either side for a decisive move. But today, I think the volatility is largely because of the monthly expiry and the fact that we had this big negative news coming in as far as tariffs are concerned.
Well, that's right, Nimesh. And that 24,950, which I had pointed earlier today, proved to be the resistance mark from where the markets U-turn. What about individual stocks? What do you have on your radar?
So the first stock on my list is Kajaria Ceramics. That's been buzzing in trade today. In fact, post earnings, despite the few upgrades, the stock has actually underperformed or been in a narrow range. Looks like there is a selling pressure going on from a larger FI. That seems to be largely over. And I understand one large family office has been a buyer as well in Kajaria at this level. So that's the first name. Second stock is Coforge. Within the IT name, it's not fallen much compared to the IT index, or for that matter, underperformed. Largely because there are buying flows, is what I understand from larger FIs. So that stands out. Kotak Mahindra Bank is the third name. Well, the stock has recovered intraday sharply, but there are sell flows, and also there is a big buzz of a large block coming in Kotak Mahindra Bank very soon. Remember, this block will be essentially from a large FI investor and not from strategic. So could be a potential FI seller in Kotak Bank very soon. And the last one is Union Bank. Within the PSU banks, Union Bank stands out today in terms of aggressive selling. So expect high delivery volumes, but on the sell side in Union Bank today.
Okay, all right. Lots of buzzers as always in a volatile market, digesting what's been a big blow in terms of just global tariffs and those global headlines. By the way, the cabinet meeting seems to be over and a couple of central government schemes have been approved. There was a lot of, chatter, buzz and expectation that, of course, the cabinet is also going to discuss what's happened with tariffs and then maybe take a view. Now, we don't know if we'll actually get a formal statement from either the Commerce Secretary or the Commerce Minister, but let's watch for this. But it seems the meeting is over, and maybe in the second half we'll get some more commentary on how India is looking at the statements that have come out from the US and, of course, the US President's social media posts today. Well, with that, let's get back to the market. Mitesh is back with us for a final call. Mitesh has been volatile, topsy-turvy, again down about 0.3%. What's the final advice and final trades?
On the advice side, I think, very clearly, as I said, the index is not doing much, so avoid the index. But on stock side, I have STBT on Gas Authority. Keep the stock at about 179. Maybe look for a target of around 175 for tomorrow. That's one stock, which gapped down and didn't recover. While there is some positive traction happening on the charts of JSL Limited. So it's BTST with a stop at 688 for targets of 705.
Thank you very much for that. Let's quickly talk about Aurobindo Pharma and the acquisition that they've made. Ekta joins in.
Well, yes, Aurobindo Pharma is going to be acquiring US-based Lanitco LLC. It is going to be for a deal with an enterprise value of around $250 million. They are basically the manufacturers and suppliers of complex generic pharma drugs, including controlled substances. The acquired portfolio mainly focuses on non-opioid controlled substances, particularly in the ADHD segment. Now, Aurobindo, remember, has a limited presence in that segment, so hence it should be positive. They also have a GMP facility in Indiana with an annual capacity of around 3.6 million tablets. FY24 sales stood at around $286 million versus $314 million. So Aurobindo is probably going to benefit because they'll get an addition of around $300 million to the top line immediately. Gross margins, however, are lower than what Aurobindo records, so that's something to watch out for. The estimated EPS accretion is around 5 rupees from the deal.
Okay, all right, got it. Thanks very much for that, Ekta. With that, let's move on. Welcome in our next guest on the show. Amrish Baliga is with us to take us through the final stretch of what's been a real news-heavy day. Amrish, we'll talk about earnings, tariffs, all of that in a bit, but I think your stock pick today is an interesting company from the consumer space, Varun Beverages. Tell us what makes you optimistic on Varun?
See, that's the second largest franchisee of PepsiCo globally outside US. Indian footprint is about 26 states and 6 union territories. Close to 90% of PepsiCo's India volume comes from Varun Beverages. And they have franchisee rights in about 10 countries, distribution rights in 4 countries. In 2024, they acquired Bevco of South Africa, and this has helped them expand their footprint in the African region. And last quarter, they made a Sri Lankan acquisition. In India, they have about 40 lakh retail touchpoints and growing at about 10 to 12% per annum. But the available retail touchpoints is about 1.2 crores in India. So there's a huge headroom available for expansion. And if you look at the Q1 earnings, they were better than expected. Sales volume, although it dropped a bit, but EBITDA margins improved 82 bips. And international markets, especially the African markets, helped it perform much better than what the analysts were expecting. Expected revenue growth over the next 3 years should be 20% CAGR. PAT CAGR should be about 25%, primarily driven by the international growth. Expected EPS for calendar year 27 would be about 15, and my target price is 645 for this. And when you talk of tariffs, I think this is one stock, one company which is possibly tariff-proof.
Got that. Ambrish, any thoughts on Sagility? It listed recently. It's like a tech pharma sort of a play, caters, to the US. And numbers were good. The company reported a 23.1% year-on-year revenue growth. Of that, organic growth came in at 15.4%, which is ahead of the management's low to mid-teen growth outlook. And plus, they went ahead and raised the margin guidance slightly higher. Now, it's trading higher than the issue price, which was about 30 rupees. But at this price, does it make sense to look at Sagility?
Yeah, looking at the earnings clearly, I think, if they continue at this pace, I think the next couple of quarters, you should see the valuations. Like the current valuations seem extremely attractive. So I think there's a decent, headroom for this stock to move up. I'll not be surprised if we see levels of about 58.60 over the next possibly 6 to 8 months.
What about Ambuja Cements? Ambrish, the numbers look pretty good. The stock, I think, has rallied 15-16% in under 3 months. The stock has come in for some profit taking. Your view on the 600 rupee mark?
If I see a further correction from here, it would clearly be a buy, because just not Ambuja, I'm talking of the cement sector overall. What we have seen in the past couple of years is the volume expansion, but not too much of margin expansion. But going ahead, there would be demand-supply mismatch, and because of which we should see the margins improving, because it takes a decently long time to set up a greenfield or even a brownfield expansion. A greenfield takes, anywhere between 30 to 36 months, if not more. Brownfield takes about 24 months. So there would be some amount of mismatch going ahead. So because of which I expect the margins to improve.
Stay on, Ambrish, need to get into a break. And remember to tune in to all our viewers to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders, economists, shaping both the world and India's future. CNBC TV18 Prime decodes global shifts, their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime, 12 noon for the Global Reset, 1 p.m. for the Big C, Global Lens, 8:30 p.m.
Welcome back. Just under 5 minutes before the day's action closes out, it's a 100-point drop on the index. So we've not gone back to the morning lows, but we've not been able to hold at the flat line either. And that's how the story is. It's been a decent day for actually FMCG earnings. Lever is going home as the top winner on the Nifty. Let's pull up Dabur as well, because like we just saw a while back, Dabur's numbers are not bad at all. In fact, looking at the final tally, the margin flat at about 19.6. The revenue growth, as was expected, is very, very flattish, 1.7%. But there's no fresh disappointment, at least, from Dabur. So those are some of the numbers that are on your screen. Let's quickly get Ambrish's take on this. Ambrish, FMCG, would you look at anything positively?
Yeah, absolutely. In fact, I've been positive on FMCG for a while. And the best part was managements of most of the FMCG companies have been cautious. So naturally, the analyst expectations were tapered down, especially of Dabur. And compared to that, we are seeing the performance actually meets expectations or slightly better than expectations. And now looking at the tariff issues, I think people start looking at sectors which would be least affected. And clearly, the domestic consumption story will be the least affected because of tariffs. So I think one should be looking at stocks like Dabur, HUL, Emami, HUL. I think these are the ones to be looked at. And also Jyoti. I mean, these are the 4-5 stocks where we are positive on.
Indus Stars, Ambarish, second quarter where shareholders have not got that, a dividend or any buyback. They were so hopeful that once they start, the company started getting money from Vodafone Idea, the receivable situation improved, the shareholders would get rewarded. But that's not happened yet again.
Yeah, that's what is quite surprising, and because of which we are seeing the reaction for Indus Stars. After performing decently well in the past couple of months, we again seen that disappointment, because of which the stock I think would underperform going ahead. So I'll not be surprised if we see levels of about 320, 330 for the stock quite soon.
Any view on Shilpa Medicare, Ambarish?
No, Nigel, I don't track Shilpa Medicare, so I really can't comment on that.
All right. Just pull up the intraday chart out there. That's one of the stocks actually from the broader markets that was trading, I think, with a bit of a cut. Suddenly it made a big spike up. So I think we should get the intraday chart of that particular name up for you on the screen. Wondering what's going on there. Did see a bit of a spike. Jaiswal Neko, that's the other one, moving again on very, very large volumes. But that ARC disclosure is important. They still hold closer on 5 crore shares out there. Ambarish, any view on HEG? I spoke to the management earlier today, and they are talking about better times ahead. It's a very volatile business, so that's the issue. The stock actually, from the top, it's halved its gains. Any view on this name? Graphite India, the electrode players on the whole?
I think the whole game is like looking at supplies from China. And if China starts dumping that in the market, we see that the margins of all these players actually reduces. So it's more of I wouldn't say it's a cyclical play, but I think one needs to keep a close tab on what China is doing. But for the time being, the space still looks good, at least from a short to medium term angle. So from that point of view, one can hold on. But longer term, like I said, clearly depends on the China play.
Okay, very quickly, Ambarish, NSDL, tomorrow's the last day to subscribe. It's the big daddy of CDSL.
Absolutely.
Would you recommend subscribing?
Yeah, surely. Because, once listed, I clearly see that there will be some investors who would possibly reduce their positions on CDSL and possibly buy NSDL. Unless, of course, it lists at a very decent premium, which I don't see that. Possibly it could be a 10 to 15% sort of a premium. Even at those levels, it would be cheaper to CDSL valuation-wise. So there could be some shift from CDSL to NSDL.
Okay. All right, Ambarish, thank you very much for taking us towards the end of day's play. And what we have is a 100-point cut, which is not bad, considering the headlines were so negative, 25% tariffs levied on India with the threat looming of more penalties. This is not a bad close from the bull standpoint, perhaps. It's less than a 0.5% decline. So let's talk about what got hit. Adani Enterprises 4% lower, Tata Steel, Sun Pharma, Dr. Reddy's. The pharma stocks are weak because you don't know what's coming next and if there's something more in store for pharma. So that definitely has to be taken on board. Reliance was a drag for the bulls today, 1.5% down on that stock. Coal India, Adani Ports, these were some of the stocks on the weaker side. Even Hindalco, for that matter, losing some more ground. Maruti saw a very volatile day. After the results came in, initially the stock got very excited, but then as it dawned upon investors that this is because of other income, then some of that excitement fizzled out. Finally, the stocks ended just about 1% lower. On the winning side today, you've got HUL, you have Eternal, you have ITC, you have Nestle. So FMCG and consumption, that's standing tall. And Jio Financial Services, where promoters have pumped in additional money and they're increasing their stake, that stock was up almost 3%. The Bank Nifty, by the way, not much help. Neither IT nor banks, not much help. Bank Nifty is down about 0.25%. That's the large cap screen.
Well, mid-cap index ends with a cut of about 1%, advanced decline ratio 1:2, but lots of mid-cap reactions. You had Keynes Tech, 10% upper circuit, Sagility, HEG, Greaves, Cotton. So lots of activity on the way up, on the way down. Indus Stars under pressure, Hindustan Copper weak, Aarti Industries, Brigade Hotel Ventures too had a subdued day one, ending below the issue price by nearly 5%.
Well, on that note, we'll wrap up on this edition of Closing Bell. You don't go anywhere. Markets Forward comes up next.